Hello and welcome to tradingfloor.com's weekly Asian focus. All eyes are on the Bank of Japan this week, with expectations mounting that it will follow the lead of the US Federal Reserve and introduce new monetary policy initiatives. Andrew Robinson, market analyst for Saxo Capital Markets in Singapore, gives his take on the likely outcome of the bank's two-day meeting and the impact on the yen. Welcome, Andrew.
Hello again.
With day one of the Bank of Japan's meeting over, can you describe if expectations have increased for the introduction of new monetary measures?
Well, certainly if you look at all the factors that are coming together, you could certainly argue that the time is ripe for the Bank of Japan to do its next phase of quantitative easing. Second quarter GDP was revised lower by half. The global scenario is certainly looking extremely weak. And at the meeting, we are expecting the Bank of Japan to downgrade its assessment of the local economy simply because the external factors are too great to ignore. That said, I think the market is still evenly divided, 50-50, as to whether we will see some kind of quantitative easing this time round.
And if so, I mean, what form are these expected monetary measures likely to take?
Well, they have a few possibilities. One of the major ones that the markets are looking at is removing the 0.1% limit for buying JGBs, the yield of 0.1%. So that would then allow them to push longer term yields much even lower than they are now. And that's one of the major factors they're looking at. The other one would be simply an adjustment or an increase in the absolute total of the asset purchase program. Again, that's something which has been talked about quite a lot and is what they have done in the past. I think my choice, I think we prefer to see the removal of the limit and maybe a small increase in the total.
And amidst this backdrop and the expectations, how has the Japanese yen been faring?
Well, we've seen quite a bit of yen weakness of late. I think there's not just the Bank of Japan coming into play here. Obviously, with the Fed quantitative easing last week, we saw a bit of dollar weakness, but also yen weakness. And there's an ongoing spat between Japan and China, and I think that is also weighing on the currency. The issue regarding some islands, and we've heard rumours this morning about whether China would implement some kind of economic sanctions against Japan, which is quite a major trading partner. So I think that is weighing heavily on the yen. In addition, the expectations for quantitative easing are also another weight for the yen. So we've seen dollar yen rising to the mid 78 levels, and I think maybe we've got a little bit further to go up to the 79, maybe just above there.
And looking now at important data for the Asian region this week, China has just reported how property prices are developing. What are the main concerns?
I think the biggest concern regarding China property prices was that last month we saw an unexpected increase in prices. The number of cities that reported an increase in July rose from something like 35 all the way up to 49 out of the 70 cities that are monitored. Now, everyone was concerned that this might be the beginning of a new trend, and that the asset bubble or the housing bubble would reignite in China, and thus prevent the authorities from really releasing the next phase of easing. As it turns out, the last month's data appears to have been a blip. The actual percentage price increase was only 0.1% month on month, very similar to what we saw in July. But the number of cities that reported increase in prices fell from 49 down to 35. So I think that's more comfortable for the authorities, and it's giving the chance of further easing a greater possibility. It's been estimated that the actual housing sector does affect something like 40 other business sectors within the Chinese economy. So if they were to relax the regulations or the rules regarding the housing in China, then it would give the economy certainly a very quick boost. And maybe that's something that the authorities are looking to do as they head towards the handover in the autumn and the actual shift in transition into next year.
And on Thursday, the China HSBC flash PMI will be reported. What are the expectations for this?
Well, because it's a private report, there's not actually any forecasts issued. But I think generally, if we look at the external situation, then the surprise will be if we see an improvement from what we saw last time. Last month the expectations were 47.6, came in at 47.6, so it's a good leader. I think generally the market will accept a lower number, simple as that. The surprise will come if we get anything that's reverting back to the mean 50 level.
Thanks for your insight into the Asian region this week, Andrew.
You're welcome.
Take a look at tradingfloor.com for more reports from Andrew about the Asian region.